Welcome back to Upside Down Data. Let's talk about the market and where it's heading next. So in this video, I want to take a broader view on the market. We're going to talk about Bitcoin, we're going to talk about Ethereum, and also alts like Solana, Chainlink, HBAR, and more. So let's go ahead and get into it. So when we just look at the total crypto market cap, it's still in a pretty clear uptrend. If we just look at this, we're up near all-time highs for the overall market cap. And most of this is due to Bitcoin, of course, doing quite well. Bitcoin by far being the largest market cap asset, really setting the tone of the whole market. And Bitcoin has been really kind of flirting with and setting new all-time highs recently, and is now just still consolidating in this general area, up right around currently 117, but really in that 110 to 120K region generally. Bitcoin has, of course, been the leader this market cycle, and it just continues to drive the show. Even though we keep looking for an alt season, Bitcoin keeps being the thing that goes on, sets new all-time highs, whereas altcoins have, generally speaking, struggled, especially relative to last cycle. So if we go ahead and look at the risk for Bitcoin right now, how risky is it right now? Does it have more room to move to the upside? Get a better sense of, is this maybe a local top, or do we have more room to run? And if we can run further, that might give more fuel for altcoins to be able to perform. So this is our risk model for Bitcoin. So higher values mean higher risk, lower values mean lower risk. And it cares what moves that play out over months to multiple months. It's the long-term version of the model. You see, it does a very good job of capturing these high-risk points that have marked cycle tops, as well as these low-risk points that have marked these great acquisition periods and cycle lows. So if we look at Bitcoin right now, we can see that its risk is fairly muted. It's not low, but it's not high either. It's right around neutral. 0 being neutral, it's at negative 0.19. So quite reasonable where it is right now. Now, the other question that we're going to ask, and I'm going to ask this about every single asset we talk about, is does the model suggest that this is a good time to be buying the asset, in this case, Bitcoin? And if you just look at this, the answer would be pretty clearly, well, no. The good time to be buying Bitcoin was back here when the model was down at negative 2.58 and Bitcoin was down in the 70s, here in this case, 77K. That was a good time to buy Bitcoin. Its current level, no. Now, there's gradations, right? Is this a terrible time? Is this a horrifyingly scary time to buy Bitcoin? No, but it's not a good time either, according to the model. Now, this is not financial advice. You should do what you think makes the most sense. But I do just want to talk about this idea of what does it mean to have kind of like a good time to buy or not. I think a lot of people, when they think about that, they just think, did price go up the next day? If so, it was a good time to buy. Well, I don't really agree with that, because really, in my mind, the good times to be buying a crypto asset is when the odds are really stacked in your favor to get disproportionate returns in the future. Basically, if I buy now, well, I have a lot of opportunity in the future to sell at a good price without worrying about the exact exit point. If you buy Bitcoin right, let's say, for example, I'm just going to zoom in here. Let's imagine that you were to have bought Bitcoin right here. Now, was that, looking forward, a terrible time to buy it? Well, you say, well, no, it wasn't. Look, you had all these times you could have sold. But realistically, if you bought Bitcoin here, do you think you would have necessarily known that you had to sell it when it got up to 63, 64K? Probably not. But if you bought Bitcoin down here in the March 2020 crash, or back over here, well, you had plenty of opportunities to buy Bitcoin at a good point without worrying too much of whether or not you nailed the top. You could even have missed the top completely and sold during the summer of 2021 if you bought back over here and still made a lot of profit. That's one of the advantages of buying the asset at a good time, is that when it then goes into the next run, you have plenty of opportunities to sell at a profit, even if you're not hitting the exact top. Now, some people might be upset that they don't get the full benefit. That's fine. In my view, and this is the view I've held forever with crypto, making a profit is the main thing. So many people get into crypto and they lose money even during massive bull runs. That is what we want to avoid. And so if you're making a profit, you're already doing better than a lot of people. And so if you bought Bitcoin back here, and even if you sold it here, hey, that's still a really nice profit. Even better if you sold here, even better if you sold up here, and if Bitcoin continues to go up, even better then. But even so, you're making a good amount of money. You're profitable. And that's the thing that, in my opinion, matters the most, because a lot of people get so obsessed with playing the market perfectly, with buying the absolute bottom and selling the absolute top, that they end up doing neither. They end up missing the bottom. They don't buy in because they think the price is going to go lower. Then they FOMO in late, and then they don't sell in time, and then they lose money. That's not where you want to be. So obviously not financial advice. You should do what you think makes the most sense. But that is one idea that I want to talk about, not just with Bitcoin, but with other assets in this video. So getting back to that point then, from the model's perspective, now is not a horrifying time for Bitcoin, but it's not a great time like it was back over here in April, like it was back over here in August of 24, like it was back in here of September of 2023. And something that is kind of frustrating about this idea to some degree is that it goes against your emotions. Your emotions tell you you do not want to be buying Bitcoin here. You do not want to be buying Bitcoin here because it feels scary, but that's usually when it's a good time to be acquiring, when the data are going against your emotions. Data say it's great, emotions say it's terrible. I personally trust the data over my emotions. Let's take a look at Ethereum now. So Ethereum has been the talk of the town in crypto because it did, according to what exchange you look at, set a new all-time high just recently. But again, if we look at its current risk model getting up towards 2, this is looking more like a potential for a local high or local top, at least historically speaking, than it is like a great acquisition point. Once again, the great time to be buying, the good time to be buying was when Ethereum was down at 1500, was down here at negative 4.88 on the UDPI, the long-term UDPI risk model here. Now, not so much. And again, this is the advantage of when you go with the data. If you bought back here in April of this year, you could be selling over here, you could be selling now, you're making a good profit. You're not sweating it, you're not worried. You have the luxury of picking your points, picking your moments of when you're gonna sell. Whereas if you're FOMOing in late, maybe you did buy it up at around 4K, but now you're really sweating. You know, do you sell it at 4.5K for only a small profit? Do you keep holding, hoping it goes up? Do you hold it and then it collapses down below and now you're in loss? Things are a lot more nerve-wracking. It's a lot more difficult. Whereas if you just follow the data, just go with the model, you're sitting pretty. Even if you bought back in some of these other periods, but back when Ethereum's at 2300, still you're in a pretty luxurious point right now with where Ethereum is at. So that's how Ethereum is looking right now. Now, let's get into some altcoins, because Ethereum, second largest crypto asset, maybe it's not surprising that it's starting to pick up some steam, especially with some of the wins in the regulation space and some of the laws that have been passed. What about some altcoins that might not be quite in the forefront of that? So we're going to start with Solana being another large cap crypto asset a lot of people follow. Here we see kind of an interesting story, a little bit more akin to Bitcoin, even though Solana is at a different point in its price action. It's not setting new all-time highs recently, but it is right around neutral. So once again, not a good time from the model's perspective. That was back here in April 2025, but not a horrifying time either. Not really necessarily signs of a local top just yet. Doesn't mean that there can't be a local top, but it probably wouldn't be driven by anything internal to Solana or its price action. It would be some broader market sell-off that would cause us to be a local top. Internal to Solana, everything is looking fine from a risk perspective. It's just that if you're deciding on the question of allocation, it's not as great as it was back when the data said it was a great time back over here when Solana was at $100. Now it's up almost at $200. And it's a similar story if we look over here at Chainlink. So Chainlink gave us plenty of opportunities to be buying it quite cheaply, really since 2023. Many opportunities to just look at the model, getting back down these deep value zones. And every single time, if you would have been buying Chainlink at every single one of these points when the model was saying that this is a great time to be buying, you'd be very happy right now. You'd be well in profit. You'd be happy that you did so. But that question then is, right now, what's going on? Well, again, this is looking like it's getting closer to a local top point from a risk perspective than it is like a great acquisition point. Once again, not financial advice, do as you will. But that's what the model is suggesting right now. Once again, just highlighting the advantage of going against emotions, going against the narratives, buying when the data say it's good, rather than maybe when your emotions feel it's good, because now you have the luxury of deciding where that exit point is. And even if you miss the ideal, it doesn't matter, you're still going to be in profit. Okay, let's talk now about HBAR. Then I want to give a broader view of the altcoin market. So we're just going to wrap up here with HBAR, then get into that. So HBAR, once again, had you been buying through the bear market at these good acquisition points, you would be very happy right now, well in profit. And even just as of spring this year, here in April, even as early as recent as July, you'd be quite happy that you did so. Now we're getting back up to a bit above zero, so getting more into that riskier territory, but not as overextended as some of the other assets that we've been looking at. So once again, great time to be acquiring, not from the model's perspective, but not a horrifying time either, or not necessarily suggesting a local top has to be here just yet. So now if we take a bigger view of the altcoin market, what I'm showing you here is the average long-term UDPI value across a bunch of the large cap assets in the space. So these are basically including things like Solana, BNB, XRP, so on and so forth, big altcoins. So we're not looking at Bitcoin, Ethereum, we're just looking at large altcoins to get a kind of a barometer of the general space and how risky is it. So I put Solana's price action in the background here, but again, this is all those other assets, so their price actions will be different against this. This is just some reference point. But generally speaking, once again, you know, buying at these points for the altcoin market was generally very advantageous back through here in the bear market, and then selling at these high points was advantageous. But once again, with the altcoin market, we actually saw a pretty massive buy signal back in April. And coincidentally, or not really coincidentally, just with all these altcoins we're looking at, you'll notice that April was uniformly a fantastic time identified on the UDPI for each and every one of them. Had you been buying in April, you'd be sitting pretty happy right now, pretty much with a lot of alts. Not all of them. Some have fallen off, some have not done so well. But generally speaking, if you're kind of buying a basket of altcoins, April was that great time to be buying, of course, when it felt the scariest to do so. Now we're going up quite a bit from there. And overall, as a space, if you're just kind of using this as a barometer of the overall kind of heat or risk of the altcoin market, a bit above neutral. So not a great allocation point from the model's perspective, or kind of this aggregate views perspective, but not horrible either. Not necessarily saying that a local top has to be forming immediately, but we're starting to get to that point. It's starting to get a little bit more scary in the altcoin space. And especially if we got up to these really high levels, this is where the local top was for a lot of altcoins back here in December of 2024. If we get back anywhere close to there, that's where I'm going to get really concerned. So to kind of wrap us up then across the board, if we just look at this from Bitcoin to Ethereum to a bunch of different altcoins and just looking across altcoins, what I'm seeing from the model, and again, not financial advice, you should do what you think makes the most sense. What the model is telling me is that right now is not a terrifying point in the market, certainly not for, especially not for kind of altcoins broadly. But if you're asking, is this a good time to be acquiring? Well, unfortunately, we missed it, right? The most recent opportunity is gone. It's in the past, it's in the rearview mirror. And now it's more about the people who did have an allocation there. Maybe when are you looking to take some off the top, take some of those profits? And that's not a nice thing to hear, obviously. If you missed that opportunity, if you didn't buy there, now a lot of people will come back in with prices going up and say, ooh, should I buy? Should I buy? Can I get in on this? Well, it's not very satisfying to hear, well, no, you probably, that's maybe not the best idea from the data's perspective to do that. The thing is with crypto, patience is often rewarded. If you miss one opportunity, another one will come along. You just have to wait for it. And generally speaking with crypto, when you want to buy it, that's oftentimes not the best time. Generally speaking, it's when it feels scary, that is when the best time is. So we're going to have to keep an eye on the data and see when we get back to those low risk points. But that's what I'm seeing. Now, if you want to play this differently, Godspeed. This is totally in your power. Again, I don't give financial advice here. I don't want you to be taking what I'm saying as gospel and doing anything based on it. It's your money. You should be making investment decisions on your own, based on your own research and what you think is best. I'm just giving my view of the market and where we sit right now. And I think pretty clearly what you can see was back over here in the spring, there was this fantastic opportunity that's now starting to play out. And really what we'd be looking for next is when is that opportunity to start really taking profits from the model's perspective. And then ideally, you might just do the same thing again. If you're doing some kind of more of a swing tradey type of thing, you just wait for the models to say that it's now low risk again. Might feel scary, but it's low risk. That's the time where you might be able to reacquire and then ride the next move up. And of course, eventually that will stop working. Eventually there will be a cycle top where buying the next dip is maybe not the best thing to do. And you won't just go off to, like for Bitcoin, for example, set some new all-time high. But really the trend is your friend until it's not. And all throughout the cycle, if you would let every single downturn scare you off from buying that next dip, you would have missed a lot of opportunities. So it's up to you of how risky you want to be. And of course, the further we go on in the bull market, the higher the likelihood is that, one of these next tops is going to be the top. So it's up to you of how much you want to follow that. But that's where we kind of stand right now. That kind of regardless of all that, it's more on the side now of the sell question than is the buy question until we get to that next low risk period. Then we can reevaluate and see what's going on. So once again, of course, not financial advice, make of these data as you will, but that is what I'm seeing. So if you want to see live data from these models and more, you can go to our website, polaritydigital.io, and sign up to our Polarity Digital Pro subscription service. And of course, if you like the video, remember to subscribe to the channel, give the video a like, and I'll see you in the next one.